Now, looking forward at Catalyst, look, I think that each public announcement, each public commitment is one more catalyst to the next. So I made my announcement corporately, the first one, and that got some people's attention. They said, well, I mean, that's something. Well, first announcement, by the way, you can see this on Twitter. MicroStrategy said, we're considering Bitcoin and silver and gold and stocks and bonds. And I love the Bitcoiners. I love crypto Twitter, because you know what happened when we put that out there? Every investor in the world ignored it, except some Bitcoiner found it, and they posted, MicroStrategy is considered Bitcoin. I'm reading, I'm like, whoa, man, talk about confident in their beliefs. It's like MicroStrategy is considering Bitcoin. They pulled that out and they started blasting that. That was news. A week later, we announced we bought 250 million. That was another news. A month later, but then it was like, oh, MicroStrategy's got an investment. Is it, is it a speculation? Whatever. Then a month later, oh yeah, we bought a lot more. In fact, by a month later, 90% of our discretionary cash was in Bitcoin. And that's, people are trying to get their heads around that. And then a bit after that, we saw the move by Square, and Jack bought us 50 million, and that was great. And then we saw Stone Ridge, and I think that was great. Where Ross, and by the way, Ross said, it's in our treasury. And then he said, the US dollar is weakening against Bitcoin 70% over the past 2 years. And that causes someone to stop and think, okay, well, legitimate, sophisticated institutional money managers are thinking about the world differently. And the Paul Tudor Jones thing was thinking about the world differently. I think you're going to see over the next 12 months, you're going to see waves of more announcements. Well, for example, we saw PayPal, big announcement. Square is 30 million person mobile bank. PayPal is 300 million user mobile bank. I think as you see tech companies build Bitcoin into their offering, those are catalysts, massive catalysts. As you see you're going to see institutional money managers build Bitcoin into their offering. First it was Fidelity saying you could buy it, but when Fidelity says, well, we've got a Bitcoin fund, you can just wire us $20 million and that'll give you direct exposure to Bitcoin. That's a good thing. And they're talking about it, and I read the press on it, but mutual funds and investment funds, I think that'll be big. I think that when you start to hear institutional investors come out and say, we bought it, right? We bought it. We're going to buy more of it. We bought a lot of it. What happens if Bill Ackman says, I bought $1 billion of it?
Right.
By the way, he hasn't, but let's go back to Paul Tudor Jones. Paul said, oh, I think I'm putting 1% into it. All the Bitcoiners took a victory lap. This is great. And then he says, oh, I put 2% into it. Okay, well, that's great. Well, my view is he's still not serious yet.
Right.
I mean, it was nice. It was nice, but it's a little bit patronizing. I mean, to be honest with you, okay, you're an investor and you're telling me that you kind of understand what I'm doing and you're going to put 1% of your portfolio into it because it's kind of an interesting hedge. You don't really understand what I'm doing. Yeah, I mean, it's kind of patronizing in a way. If you really understood and you're an investor, you'd say, oh, we made an allocation of X. We put 500 million into it. Okay. We got a $10 billion fund. Well, how important? If you really got it, if you thought, well, all my bonds and equities have fiat underpinnings and they're decaying at 10% a year or more, then you would say, a good hedge would be I put 10, 20, 30, 40% into it. But let's not go there because they do whatever they're going to do. But I'm amused because I think everybody thinks these hedge fund guys know how to make money. If they really knew how to make money, they would put $1 billion into it, and then they would get out on the wire and they would say, I bought $1 billion worth of it. I'm going to buy more. And, and if they were really smart, they would go to the 3 guys they play tennis with in the Hamptons. Because I know these guys, I've been to the tennis tournament, I've seen it. And each one of them would buy 500 million each. And then they would just successively say, I bought 500 million for my fund. He bought 500 million for his fund. The next week, someone else buys 500 million. By the time 4 of them have bought 500 million, bang, 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 the FOMO kicks in like there is no tomorrow. You remember when Bill Ackman got on television during the crisis and he basically groveled and explained how the world was coming to an end while he was shorting the stock market? He shorted the entire stock market. He said the world was going to come to an end. The market traded down. He covered his bet. He made $2 billion, and then he bragged about it.
That was on like a $50 million bet too. There was some crazy asymmetrical return. And
yeah, so I mean, my point is these guys do this for a living, right? I mean, this is what they do. If you've got $1 billion and you put all of it in Bitcoin, it's commitment, it's conviction. When you've got $10 billion and you put 500 million into Bitcoin, it's just a day's work. I mean, that was the idea this month. I mean, Ray Dalio's of the world, that's just kind of what you would do just to entertain yourself, or George Soros if they got interested. So I think that the guys that move next, that have the easiest possible decision-making process, the least to lose, the most to gain, are guys that are just running huge amounts of fast money in these hedge funds that are just looking for their next idea.
Totally. There's a couple things here that I thought were really interesting. One is you touched on career risk. Folks jumping in and buying Bitcoin, whether you're a fund manager or a CEO, as more and more of you like yourself and Jack legitimize the space, then it reduces that career risk for more people to get in. It's less crazy. And I think, it is a little frustrating for us mega bulls because we're both hugely bullish about Bitcoin. We've put a large portion of our net worth into it. It's hard for us to look at these other people who have, I think you were kind of right. It's a little patronizing with Paul Tudor Jones going, oh, I'll put it in a few percent. You're like, well, do you believe in it or not? Because if you understood the value prop, you'd be all in.
It's an ignorant statement, Dan.
Yeah.
to say I'm a great financial investor, I'm a master of the universe. I understand macroeconomics and investment, and I'm therefore allocating 1%. It's silly. So it's amusing. But on the other hand, you're going to see other people that are going to take a harder position. I think there are people that are taking a much stronger position in Bitcoin now. They're just not public about it, right? I mean, when I actually came out, when I came out and said MicroStrategy did it, well, I had to, right? It's just a requirement. We're a publicly traded company, no choice. But when I actually announced my own purchase, I didn't have to. And there are people that would say don't, right? And by the way, for 99.9% of the Bitcoiners, I would say don't. I get it. People would even post on their Twitter, why'd you do that? First rule of Bitcoin, don't tell people how much Bitcoin you have. I'm like, that's true for 50 million people, but we need 10 people. We need to have 10 people that will say, I bought it. I'm not ashamed of it. I'm going to buy more. And you can too. In fact, not only can you probably should. You might want to get some in case it catches on. So at the point that I do it, if Jack Dorsey does it, if Mark Zuckerberg does it, if Jeff Bezos does it, if some random billionaire playing tennis in the Hamptons does it, if a Bill Ackman does it, when a Paul Tudor Jones does it, if Paul Tudor Jones really wants to do something good for his position in Bitcoin, there could be no more accretive thing he could possibly do than to be honest and say, I bought 400 million of it and I'm going to buy more. It's like, if you're not willing to say that, you're just patronizing and insulting the rest of us, right? I mean, that's my view on that. If you're not going to say that, it's like, so I think it's going to happen, right? There is some bravery, some courage here. By the way, I own courage.com, right? I don't think I'm going to path it to Bitcoin, although I could, but there's a difference between buying $250 million worth of Facebook and buying $250 million worth of Apple and buying $250 million worth of sovereign debt or gold. These things are traditional, conventional asset classes that everybody understands. If you were to stand up and say, oh, I bought $250 million worth of Facebook, that's somewhere between vain, and flashy and arrogant or whatever. But when you're birthing an asset class, when you're actually legitimizing a brand new idea that 99% of the world doesn't understand and they are either ignorant of or afraid of, at that point, it's important that people with conviction stand up and they say, nothing to be ashamed of. I did it. I'm proud I did it. I'm going to buy more. It wasn't a hedge. It's not a speculation.